Let's take a look at the 18 online businesses for sale that Empire Flippers has newly listed this week. The first thing I'm going to do here is share my screen, share my entire screen. And there we go. You can see the YouTube interface. And let me just pull the YouTube interface over to my other monitor here while I'm recording. As I already mentioned, we're going to take a look at these 18 online businesses for sale here that Empire Flippers has and sent out to us 5 hours ago on January 19th, 2026, with their 18 new listings. I have to say, 18 of them in 1 week is a lot. That's quite a few of them. And real quick, I'm going to lower my camera there and lower my monitor because it was just up too high. I changed the position of my monitor based on whether I'm sitting or standing, and it was still in my kind of like standing spot. Anyways, better spot now. 18 listings here. That's a lot of them in 1 week. So we got to move quick here. I'm going to try and cover them in, say, 15 minutes or so. And on that note, guys, as I go through them and share whether I would consider acquiring them or pass on them altogether, let me know in the comments below whether you would consider acquiring any of these or whether you would pass on them altogether. I would love to hear from you guys. And if there's anything you feel like I miss out on or overlook entirely, let me know in the comments as well. Let's jump into it here, starting with the first one, making $50,943 a month in profit, listed at a 35x valuation multiple. That is a monthly multiple, a little less than 3x on an annual basis. It is an EU-focused Amazon FBA business with three well-established brands under the account, concentrated on the home, DIY, and equipment sectors. Notably, the business is focused on the German market with significant expansion opportunities. This is evidenced by a successful recent launch in France in 2025. The business operates exclusively on the Amazon platform, showcasing a steady year-over-year growth. Okay. Personally speaking, and I've said this 100 times on the channel, if you follow this channel, you already know this. If you don't follow the channel, hit the subscribe button right now so you get all of my insight into online businesses for sale, acquiring online businesses, and the deal analysis that I like to do here on YouTube. Yeah, hit that subscribe button. But if you're a subscriber already, you probably already know that I do not like Amazon FBA businesses just because they are so subject to platform risk. And Amazon is notorious for squeezing their sellers to the top, taking fees off the top line, off the bottom line, by charging fees for fulfillment and all that. It's just a difficult game. And then Amazon can also jump into the space. So I don't like FBA businesses. We also don't know how old this business is. I'm making a nice profit here for the seller, but I'm not ready to write a $1.78 million check to make it mine. Let's go on here. A much smaller one making $3,000 a month in profit. Another Amazon FBA business listed at a 22x valuation multiple. This one resells products from established third-party brands, primarily within the marine tools and equipment niches. It currently offers a catalog of 90 SKUs with the top five accounting for 32% of total revenue. Key strengths include 32.62% revenue growth over the past 12 months. This one's interesting, right? I like their niche, marine tools, valuation multiple is low, but it's also a very, very small business there at 3,000. This may be a good small growth opportunity if you want to take a swing at fulfilling the bull case for an Amazon FBA business, which is using the existing product market fit and supply chain that you have and fulfilling it or selling it through your own website, getting higher margin and sidestepping Amazon altogether. That's a small growth opportunity for a savvy marketer, but as I've said many times before, more people have tried to take businesses off of Amazon and failed than have been successful. Far more people. So it's not as easy as it seems. Let's keep moving here. Making $15,000 a month in profit is an e-commerce business listed at a 30x multiple. It is launched as a direct-to-consumer women's fashion brand. It's a leader in the industry with a keen eye for trends and efficient operations. It operates entirely on Shopify, ensuring a streamlined e-commerce experience, both for the brand and the customers. Financially, the brand is solid, maintaining a stable COGS in high 30s to low 40s percentage, net profits at 20 to 25%. Minimal physical inventory. They've got a 3PL in China. Um, this is interesting. I really like to know how long this business has been around. I wouldn't be interested in acquiring something that is just like a pop-up e-commerce factory because those are sort of trendy. If this one's been around for a few years, I think it might be worth certainly looking into if I'm interested in acquiring an e-commerce brand and am open to the fashion industry. The margin is healthy, the COGS are low, and clearly, based on the math of, let's just say 35 to 25, there's room in there. There is room, but there's probably about 40% that's being spent on advertising here, and it's making a healthy profit. Not bad for an e-commerce business. Next up, an Amazon FBA business listed at a 28x multiple, also small, focuses on a single parent ASIN with 4 SKU variations, so one product, 4 variations, 4.2 stars. Net margins average 25%. I'm not seeing anything here that makes me excited about this Amazon business. I would pass on this one here. Another Amazon FBA business making $2,200 a month in profit, listed at a 31x multiple, operates in the 3D pop-up greeting card niche, offers 58 SKUs, 14 parent ASINs, all within the same product category. Small Amazon FBA business's product doesn't seem hard at all to rob and duplicate. I'm sure there's a dozen print-on-demand suppliers that could fulfill this. I think this is, like many of these FBA businesses and many online businesses in general, great business for the seller to own, not a great business for you to buy. I would pass on this. Let's keep moving on here, making $6,866 a month. Another FBA business launched their 28, they're asking 28x valuation multiple as a trademark in the Amazon brand registered account. Includes a focused portfolio of 7 main listings focusing on inspirational and affirmational cards and calendars. Best-selling product has garnered 1,500 reviews and an average rating of 4.8 stars. I'll just say it, I don't really like it. It's Amazon FBA, but there's a little bit more here to like than other businesses that we've looked at. Namely, it is 6 to 7 years old at this point. It is trademarked, brand registered. Product has good ratings at 4.8 stars, but the product is not that hard to duplicate. So I don't know how I really feel about that one. It wouldn't be one that I would jump into. I'd look for something that is a little bit higher quality. Another Amazon FBA making 3,500 a month in profit in the bed and bath niche. Let's see, business consists of 4 SKUs across 2 ASINs, so 2 products, 2 variants. Inventory is currently stored and fulfilled through Amazon FBA with Amazon warehousing and distribution and third-party logistics. Nothing that really jumped out at me. Another Amazon FBA making $5,200 a month in profit, listed at a 36x valuation multiple, established in November 2022. It's a little over 3 years old. Operates in the sports niche, specializing in golf-related products. 13 SKUs, all of which are well established. The best performing products maintain 4.5, 4.67 star rating. Not looking like anything better than any of the other Amazon FBAs. Another FBA business. What is this? It's supposed to be the week that everyone wants to sell their FBA business because they've all been watching my videos and hear me ranting about the platform risk of Amazon. Founded in April 2023, operates in the U.S. automotive accessories market, focused on a catalog of 16 SKUs, working with 2 established suppliers in China. Has social proof, 100 reviews. Nothing special about that one. I would pass. Another FBA business launched in 2021, making $7,700 a month in profit, listed at a 32x valuation multiple, has a strong reputation through high quality products and consistent performance with its top 2 boasting over 4,000 ratings. I'm perplexed as to why they didn't give the star rating. The business maintains stable year-over-year revenue and 15% net profit margins. I'd still pass on this one. Another FBA business in the EU making $9,369 per month in profit in the home bed and bath niche, launched in 2022, specializes in mattress accessories sold under two brands, has achieved 106.69% revenue growth over the past 12 months, driven by a focused product catalog of 25 SKUs across four parent scenes with a low total advertising as a cost of sales of 8.4%, a profit margin of 13.95%. Just another Amazon FBA business to me. I would pass on this one. All right, finally, not an Amazon FBA business. This listing is for a business operating two YouTube channels in the travel and hospitality niche, active since May 2022, making $11,000 a month in profit and listed at an asking price of 35x, or valuation multiple 35x. Both channels focus on informational content related to luxury and high-end travel resorts. Together, they've built a combined subscriber base of 45,000 and have demonstrated consistent year-over-year revenue and profit growth since inception. Majority of video traffic is driven by YouTube search and browse features, with viewers primarily located in English-speaking countries. Videos typically range from 10 to 15 minutes in length and perform strongly, achieving average click-through rates of approximately 9%, average click rate exceeds 40%. Channels are monetized mainly by YouTube ads, with affiliate revenues providing some diversification. YouTube channel, it's been around for going on 4 years, 3.5 years. At this point, we don't know who is in the videos. We don't know if the seller is like actually going to these locations and filming content, and if so, is that factored into the P&L to arrive at this $11,000 a month in profit? Are these basis videos? How high quality are these? If if these videos are really in some way high quality, then this could be a strong buy, but I don't see how they would be high quality unless the seller is actually going there and getting the content, right? If there's voiceover stock footage, it's kind of easy to rob and duplicate, and I think that, well, the opportunity would, if assuming Amazon YouTube doesn't knock you out of the game altogether here, I would say that somebody else would come in and produce higher quality content in that space and arbitrage opportunity here. I'm not wild about that, but that is one that I would consider. Next up, another Amazon FBA making $2,200 a month in profit, operating in the personal care and health niches, established in 2018. They specialize in oral care products with design specifically geared towards children. It is an Amazon brand registered and trademarked, and it currently manages 23 active SKUs. Its top performing listing has over 1,200 ratings and an average rating of 4.4 stars, and it is ranked in the top 50 subcategory. I'm not really seeing anything too appealing about this one, so I would pass on that as well. Next up, a display advertising business in the romance niche, listed at a 28x valuation multiple on $2,500 a month in profit. Started in 2023, it has carved a niche in the realms of relationship, communication, and hairstyle inspiration, primarily attracting a female audience. Since its inception, the site has strategically harnessed the power of Pinterest, driving nearly all of its traffic from this platform. The focus has turned the Pinterest account into a well-aged, authoritative asset that boosts the visibility of new content relative to ease. I'm not wild about display advertising businesses. This is really, blog 2.0 here, blog version 2, because blogs struggle to get traffic to Google, right? Like nobody's really consuming your content, and it's hard to rank on Google. There's no real hacks anymore. You have to build a solid brand to get that traffic. A lot of people have diversified to capture interest traffic. Some people have been very successful at it. I have really not jumped into it. I've kind of dabbled in it just to get my toe wet in it, but I'd rather focus on businesses that have a sustainable product that you can acquire customers back for. A brand, in other words. Well, there can be a brand in a display advertising business, I don't really see that's gonna change here. I don't see anything in this brief detail implying that it has. I would be looking for something about email subscribers, right, and direct branded traffic, ways that they've captured the audience. I think this is really just a platform dependent Pinterest arbitrage business. They capture traffic from Pinterest and put some ads on it and monetize it. Yeah, don't really see anything valuable here. I would pass on this one. Next up, we're down to our final four listings. The SaaS business making $1,162 a month in profit, listed at a 48x valuation multiple, founded in 2003, operating in the business and technology space and serving web developers, web designers, and DIY builders. The platform has over 20 years of operating history and is grown entirely through organic traffic with no lines of paid advertising costs. I don't really know what the heck this thing could be. $1,162 worth of profit is absolutely tiny. I do not think that anything at that size is worth a 48x valuation multiple, especially considering the tech was established in 2003, and we don't see any other details telling us that it has been updated. I think that would be key to see here. That might substantiate the valuation a little bit more, but still not much. This is just a very tiny little guppy of a project here. It's not worth 48x by any stretch of the imagination. 24x. You really have to understand what you're getting yourself into, what kind of updating is going to be required, how valuable is the prior customer list. I don't I don't see much of value here. And in a good case, this business was a lot bigger before, but then to take it over going forward, assuming it has been on the decline for a few years and was a very large business in the past, you still have to revamp the product entirely and then try to sell it to the past customers. I don't know if that would be of any value, particularly in the way that the technology and web space operates right now, where things are just popping up and taking off so fast and changing so quick. Customers from a couple years ago probably don't even remember, nor do they care about you anymore. I would pass on this one. Next up, making $4,334 a month in profit, listed at a 28x monthly valuation multiple. It is an agency with Amazon Associates income. This is a long-standing healthy recipe site started in 2012 by its current owner. The site has seen resilience in Google updates and notably receives over 20% of its traffic from organic social, with a well-followed Pinterest account operated solely by the owner without the need for additional employees. The business has been managed with a hands-off approach, primarily focused on evergreen and seasonal content that continues to attract visitors without the need for frequent new posts. The site boasts a substantial library of content that is relevant and engaging. I don't know where this agency is coming from. I was thinking that this is some type of like marketing agency, and I was perplexed initially to see Amazon Associates in here. You don't really associate agency with Amazon Associates at all. I'm reading this like a blog, considering they talk about its resilience through Google updates. I like that they've got diversified traffic in the form of Pinterest here. I think this would be better than the other Pinterest display advertising business. But still, I don't really see a substantial product or brand or anything indicating that that has been achieved here, particularly at this small of a size. I would pass on this one here. Ooh. Next up, this is a big one here, making an average monthly profit of $118,000 per month, listed at a 59x valuation multiple in the lead gen niche. This is a highly profitable lead generation agency specializing in motor vehicle accident settlements. Operating for 5 years, the business generates over $600,000 in average monthly revenue with a strong 30% net profit margin, using exclusively video ad campaigns across YouTube, Meta, and TikTok. The company drives traffic into custom built funnels, The details are captured and leads are instantly sold on a real-time bidding platform to legal call centers and data brokers. This is a lead gen business that I'm very familiar with because I do operate a lead gen business, not in this space. You have to be very skilled at running paid ads, and the real value here is going to be how many call centers and data brokers they have in their system and how many relationships and how diversified the uh, the customer base is really here, right? If this is all just going to, and this is not uncommon to see, all of this revenue going to what revenue on this 600 average monthly revenue, that's 7.2 million a year. It's not uncommon to see in these businesses where the revenue gets highly concentrated, like one or two buyers, because they're just aggressively buying all the leads. In that case, it will be very hard to justify this 59x multiple. And I'm not sure this multiple is even justifiable in any case. A strong, strong bull case for this valuation would be that no buyer buys more than 10% of their leads that come in. And to do that, they would really have to have relationships set up or customers that are the actual law firms themselves, as opposed to middlemen companies that are buying them and then reselling them to the legal firms. That happens quite a bit here, and that is what often happens in these cases where the concentration gets so high. So yeah, if this business really has diversified revenue, I think a 48x on the high side would be a more realistic valuation multiple. I don't see this trading at 59x. I just think that is, not really reflective of the quality and kind of brand that's built out here. Because oftentimes these businesses don't have any brand. They're really just a media arbitrage operation. And as I've already mentioned, the equity comes from the relationships with the lead buyers and having quite a few of them in a very diversified customer and subsequently revenue stream. On the flip side, these things can become very concentrated if one of these call centers or data brokers is buying up all of the volume. And I guess the fact that it says call centers and data brokers, that right there tells us that they're not selling to the law firms. So yeah, unless there's just that many call centers and data brokers in the legal space, I think that this 59x multiple is very hard to justify. But I would consider this, especially considering my experience in operating a business similar to this one here. And finally, making an average monthly profit of $12,862 a month in the e-commerce space, listed at a 20x valuation multiple. I think it's the lowest one here in this email. It is an established e-commerce brand specializing in high-quality cosmetic products with strong emphasis on eyelash and eye products. Launched in 2017, the brand has a notable presence in the European market, boasting combined social media following of over 135,000 followers on Facebook, Instagram, and TikTok. In addition to several media mentions, the business is highly profitable with strong profit margins. This one may be my favorite of all of them. It is 7 years old at this point, maybe a little older, maybe close to 9, getting into 2026. They've got a trademark. The margin is solid here. Valuation multiple at 20x is relatively low. If we're going to look into this business further, I would certainly want to look at the trend of the revenue. Is this business trending up or down in revenue? And what are their supplier relationships like? And what would it take to sell this product in the United States? I would consider acquiring this one. What's your take? Of these businesses here, which ones would you consider acquiring? Let me know in the comments below. On that note, guys, before we go any further, I'm going to open up this e-commerce beauty eyelash business here and take a deeper look at it. But before we go further, if you found this video helpful and insightful, you know the drill. Smash that like button to help me out in the YouTube algorithm. let's jump into this one now and open it up. First thing we'll go to is the profit and revenue trend here, and we see a little bit of a decline in revenue over time. It's fairly substantial, 27,000 in December 2025 to December 2023, 108,000, back to 169 in January 2023. So steep decline in revenue, but profit has remained fairly stable. This is really interesting. I mean, a little decline, but not much. Possibly they were dumping a lot of money on ads in the beginning, or at this time they acquired a bunch of customers, and the customers keep coming back. Be it. Let's just see what this listing tells us. We know all of this. Sales are exclusively conducted through the brand's Shopify store. The vast majority of customers located in the EU. The primary markets are Germany, Austria, and Switzerland. The current owner dedicates approximately 2 hours a week to business, supported by 3 contractors who manage customer service, logistics, and email marketing. There's a big tell right there, email marketing. That substantiates my thought that they're pulling these customers back. Inventory is stored at 2 3PL warehouses, which handle all order fulfillment throughout Europe. Inventory is not normally included in the listing price. Further details can be provided to unlock this. The seller notes that a previous offer on another marketplace ended with a defaulting buyer. The prospective buyer had requested the business not engage in aggressive marketing or customer promotions leading up to the handover, which resulted in a temporary slowdown in recent revenue. Further details are available upon request from the seller. This is really interesting because that is a fair explanation for why things dropped off right there. And here we see the revenue and profitability trends again. Revenue substantially declining. Oh, look at this. In the last couple of months, October 2025, profit kind of dropped almost to zero. But still, in the long-term trend, it's fairly stable. Details down here. Origin skills required. Monitor organic traffic and rankings. Monitor and improving marketing and order management. The seller is willing to offer up to 6 months at around 20 to 30 hours per month. So it seems like the seller's motivated here. Country of business registration, United States. That's nice. Opportunity is expanding and growing sales in markets outside of the EU, especially China and the US, focused marketing on chemo needs, emphasizing safety slash gentleness, growing to the growing market, growing organic, social, and search customer acquisition for improved margins, ensure new competitors can affect the economic business changes and manufacturing regulatory requirements. This one is really interesting here, especially at that valuation multiple. I'd certainly want to smoke out what did they do in the last few months? What did they stop, and why did they stop it for the seller or the buyer? Why did the buyer want to stop it? And then I would focus on the feasibility of selling into the U.S. I would also want to look at what marketing has been done to acquire customers. It doesn't really allude to anything else other than organic traffic and email remarketing to bring customers in. That's really all that's been said here. They didn't mention anything about paid advertising. So I'd be really curious to know what they've done for paid advertising, if anything, and if nothing, excuse me, how could paid advertising be done here, and what could be done to really drive sales. Now, while right after I say that I don't see anything besides search, organic SEO, and then ultimately email marketing. You see these numbers: total advertising and cost of sales 25.79%, and cost of goods at 6.91%. Both the cost of goods 6.91% is low. This is also low in the grand scheme of advertising, but it indicates that they are spending money on on advertising. Yeah, so it's an interesting listing here and possibly a good business for somebody looking to acquire an e-commerce business. On that note, guys, what's your take on this listing? Would you be interested in acquiring this e-commerce business? Let me know in the comments below. And if you found this video helpful or insightful, you know the drill. Smash that like button to help me out in the YouTube algorithm. I am calling it a wrap. Signing off.